Ever feel like you're running on that financial treadmill? Working hard but not really getting anywhere.
Yeah, I think we've all been there.
Well, today we're taking a deep dive into some unconventional, maybe even controversial, ideas about building wealth. We've got this clip from entrepreneur Robert Kiyosaki, and let me tell you, he really shakes things up.
Ah, Kiyosaki. He's always good for a thought-provoking take.
He definitely doesn't hold back. So he's talking about these two different paths to wealth, the traditional employee route versus the entrepreneur route.
Classic Kiyosaki. He loves those contrasting models. So what's he saying about them?
Well, he uses this metaphor of a gold mine to represent real wealth.
Okay, I'm intrigued. A gold mine.
Yeah. And he contrasts that with just saving dollars, like putting your money in a savings account.
Ah, I see where he's going with this. He's
But
talking about owning the means of production, so to speak.
exactly. Instead of just accumulating dollars, he's saying you should be focused on acquiring assets that generate income.
Like, instead of just saving a paycheck, you own the business that generates the paychecks.
Right. Think about things like earning rental properties or building your own business. Those are assets that actually produce wealth, not just store it.
It's like the difference between, I don't know, collecting rainwater and owning the whole well.
Exactly. It's a whole different mindset about wealth creation. But, and this is where things get really interesting, Kiyosaki is a huge proponent of using debt to buy assets.
Whoa, wait a minute. Debt. Isn't that like financial sin number one? Most advice out there says to avoid debt like the plague.
Right. That's what I thought too. But he actually says, I use debt to buy real estate. He even kind of emphasizes it, like he's proud of it.
Okay, now we're getting into the nitty-gritty. So how does he justify that?
He calls it leverage.
Leverage, right? It's all about using borrowed money to potentially magnify your returns. So say you take out a loan to buy a rental property.
Yeah.
The rent you collect from tenants covers the loan payments, and ideally, even more. Then, as the property value increases over time,
You're making money on the appreciation, which is amplified because you used leverage.
exactly, it's like you're controlling a larger asset than you could afford to buy outright with your own cash.
I can see how that would be attractive to an entrepreneur, but doesn't that come with a lot of risk?
It definitely does. You're essentially multiplying both the potential gains and the potential losses. If the market tanks or interest rates spike, you could be in a tough spot.
Yikes. So this is definitely not a strategy for everyone, right?
Absolutely not. It requires careful planning, a strong understanding of the market, and frankly, a high tolerance for risk.
It's funny because even though Kiyosaki seems to be all about taking risks, he also makes this bold statement about taxes. I pay no taxes legally.
Hmm.
And that really got my attention.
Yeah. That's classic Kiyosaki pushing the boundaries. Now, before everyone panics, it's important to understand what he means by that. He's not advocating tax evasion.
Right. We always want to be clear about that. We're all about being responsible citizens.
Of course. He's talking about using legal tax strategies that are available to entrepreneurs and business owners.
So what are some of those strategies?
Well, for example, if you're self-employed, you can deduct certain business expenses from your income. That could include things like your home office, your computer, internet costs, travel, all sorts of things.
Right. And then there are things like depreciation, tax advantage retirement accounts, and all those kinds of things.
Exactly. It's about being savvy with the tax code, not about trying to cheat the system.
So it's really about financial literacy, knowing the rules of the game, and how to play them strategically.
Absolutely.
Yeah.
That's a theme that runs throughout a lot of Kiyosaki's work. And speaking of thinking differently about money, Kiyosaki is also a huge advocate for gold and silver as savings vehicles.
Yeah, he seems to prefer precious metals over traditional savings accounts, or even the stock market. What's the thinking there?
Well, he sees them as a hedge against inflation and economic uncertainty. Historically, gold and silver have tended to hold their value even when currencies fluctuate or markets crash.
Oh, so it's like a safety net, a way to preserve your wealth during times of turmoil. Kind of like in gold we trust.
Exactly. That's the idea. It's a store of value that's not tied to any particular government or economy. But of course, there are drawbacks too.
Yeah, I was thinking about that. Doesn't that mean keeping a bunch of gold bars stashed under your mattress? They don't exactly generate income like a business or rental property, do they?
That's true. They're not an active investment in the same way. And the price of gold and silver can fluctuate, so there's still some risk involved.
So it sounds like there's no easy answer here. We've got traditional financial advice telling us to save diligently, get out of debt, buy a house. And then we've got Kiyosaki urging us to think like entrepreneurs, embrace leverage, maybe invest in gold. Is there a middle ground?
That's the million-dollar question, isn't it? I think the key takeaway here is that there's no one-size-fits-all approach to building wealth. It really depends on your individual goals, your risk tolerance, your circumstances.
It's definitely a lot to consider.
Yeah.
I think what really struck me about Kiyosaki's perspective, though, is the emphasis on mindset. It's not just about specific strategies, it's about being proactive and taking control of your financial future.
I agree. It's about thinking beyond just saving money and looking for opportunities to create wealth. Maybe the real gold mine is that mindset shift he's talking about.
I like that. Maybe it's not about literal gold, but about finding your own version of a gold mine, whatever that looks like for you.
Exactly. And that's what we all need to figure out. What are our goals? What are we comfortable with? And how do we create a plan that aligns with those things?
That's some great advice. So even if you're not planning on buying a literal gold mine anytime soon, remember, the most important investment you can make is in yourself, in your financial education, and in your own ability to create wealth. Think outside the box, explore different options, and build your own path to financial freedom.
Couldn't said it better myself.
And that's it for our deep dive today. Thanks for listening, and we'll catch you next time.
See you then.